We've got a great panel, and we've got a great moderator to lead it. He's somebody you might have heard of. He's the chairman of the World Business Angel Investors Forum. Please welcome our moderator, Baybars Altuntaş. Baybars, thank you very much. And welcoming some people that are known to the WBAF and some that are new. We'd like to welcome an old friend of the WBAF, Harry Tommy Davies, the president of the African Business Angels Network. Very important ecosystem. Thank you very much. Come on back. All right, people, just do your best to fill up this room with a little bit of noise. Give it all you've got. Paulo Andres, the president emeritus of EBAM, the European equivalent. Thank you very much for coming. Hey, that's what I like. Fantastic. Graced my company at lunch today. Was very happy for it. Tarek El-Kadi, chairman of the Mediterranean Business Angels Federation. Kadi, can you come and join us off to my left? Thank you very much. There we go. And we'd like to round that out with my breakfast buddy from getting off a flight early on Wednesday morning. Of course, that's Israel Pons, who came all the way from Mexico. He is the honorary president of the Latin American and the Caribbean Angel Investors Federation. Israel, hi. Muchas gracias. Thank you for coming. All right, Baybars, over to you.
Thank you very much, Andy. Welcome to our roundtable, first of all, and I'm thanking you so much for joining this important roundtable, because you are the leaders, as a matter of fact, of your continent's regional innovation and angel investment ecosystem. So there are some important questions that I think we have to give a very clear answer in this roundtable. My first question is, when the US ambassador to EU had joined the World Congress 3 years ago, he had said the main problem of Europe is not a startup problem. It's a scale-up problem. This is what he said 3 years ago. So my first question is going to Paulo Andres, because he is the emeritus president of the European Trade Association for Business Angels, based in Brussels, founded in 1999. And do you agree with Mr. Ambassador? If you agree, why this is the case? Why Europe is starting from scale-up stage, and why startups want to move to United States when after they complete their startup level? Then please, Paulo.
Yeah, I tend to agree that one of the biggest problems in Europe is the scale-up, because in reality we have 28 countries, and to establish a company in each of these countries is not as easy as establishing a company in 28 states in US. So we have a problem there. Of course, when you talk with the entrepreneurs, they also say that there is a problem in funding the startups in Europe. So there is always a problem in Europe.
So funding problem at the seed level, or series A, B, C, D, or at what level generally the funding problem of?
I think that when you talk with entrepreneurs, they say that there is a problem in the seed area. I think there is the market is flooded with money. I think there is too much money in the market. I don't think there is a problem in the early stage area. Of course, what is needed is a better redirection of the money and a better usage of the money. And now it's a good time in Europe, because we are discussing the next framework program will start 2021 to 2027, and it's a good time to discuss how are going to be used the structural funds and the European funds. But mainly, I would say that if you ask me what is the main problem in Europe, is about the scale-up and not so much in terms of early stage.
But what I see, for example, company valuations are generally, maybe always, lower than US. So most startups are trying to move to US for second or third round investments or to make exit, because company valuations are better. Same entrepreneurs, same business model, same business, almost same customer, but it is 5 times more valuable than Europe. Why this is the case? And on the other hand, please don't forget that in the States, for example, if we want to make a comparative analysis between two ecosystems, not so much support from the government, like putting money in Europe, EIF, European Investment Fund, and announcing many funds, the European Union's projects, etc. There's a great support in Europe, not so much in the States, but still there is a gap between the company valuations, and there is also a gap between the keenness of startups to stay in Europe and moving. What is the reason, according to you?
It's very easy. On the valuation, you value a company based on the future earnings of this company, on the future value of this company. And if you are in a market that you can grow very rapidly, that you can scale it very fast, it has more value to the investors. This is one side. The other side is the liquidity of the market. When you are in a market that is not liquid, then the valuations are lower than in a liquid market. It's as simple as that.
So liquidity is
Yes.
the main challenge. What about Africa, dear Toby Davis? Because you are the president of the African Business Angels Network, and I think there are some new offices that will be opened in Namibia. This is what I saw recently in the message. So what is happening in Africa? And you have just heard the challenges in Europe. And what about Africa? What are the challenges and opportunities in Africa for investors?
Well, I think I can sympathize with what Paulo is saying. You're talking of 28 countries. We all like to compare with the United States. I think of the United States as 50 countries with one language, one set of laws, and no borders. It's the easiest way when you look at it from that perspective, especially when you consider that California is one of the it's probably the third or fourth largest economy in the world. So America has 50 countries integrated. So it's hard to compete, and they're an $18 trillion economy. Now let's come to Africa. We're 54 countries, each with its own border, each with its own legislation. So it's not surprising to see that the big economies, i.e. South Africa, Kenya, Egypt, Morocco, Nigeria, are the ones that are dominating in the startup scene for that reason. Why? Because those are the economies you can get critical mass from. But we still have exactly the same challenge. Because yes, Nigeria has population of 200 million is the biggest, but addressable market is 10% of that in terms of having disposable income. So for you to really grow, you have to do other African countries. To do other African countries, you have to incorporate in those countries. You have to find resources in those countries. And not everybody, as was said, has the liquidity to support the growth of those kind of companies. So it is a challenge.
Yeah. Well, which countries are the most promising countries in Africa? I mean, to which country you want to invite investors? You can't say that come to all countries, I think, because...
I agree.
Yeah.
Well, let's look at it from slightly different perspectives in that case. The first is, if you look at those embracing and welcoming, Tunisia and Senegal now have startup laws that encourage the startup ecosystem. So they're great places to actually be. Kenya, has a dynamic environment. I would love to say Nigeria, but we are struggling with infrastructure. So the ability to scale is a very challenging one. And we also have an inconsistent approach to policy. My home state, Lagos, just banned ride-hailing a few weeks ago, and everybody's in a lurch, after somebody had just made a $15 million investment. You can imagine, in November, you give a startup $15 million. In January, the government says it's illegal to do.
I see.
Those are the kind of challenges that are being faced on the continent.
Okay. Thank you. And what about the Mediterranean region? Because you are, Tariq, your federation is based in Egypt, and you are addressing to the challenges and opportunities of a very particular region of the world, Mediterranean area. What about this region? What are the problems?
So it's very interesting dynamics when we move to the Mediterranean, because we're connecting 3 continents together. We're connecting Africa, Asia, specifically Middle East with Europe. And the challenges and opportunities on the Mediterranean, there are a lot of similar ones, but there are also a lot of differences. So if we're looking at the gaps that are in the countries, we find 3 different tiers or 3 different levels when we did the mapping. Looking at angel investing, you'll see that some countries are very advanced. Some countries do not have angel networks, do not have angel investing.
Which countries are very active in Mediterranean region?
So we're looking at France, we're looking at Spain, we're looking at Portugal. Most of them are active, but when we're talking about, these are the top 3 developed countries that already have tens or more of angel networks that have been doing that for a long time, and they have proper legislation and startup programs that are initiated for that. Let's say on the top of the list would be France.
Yeah.
And we have other countries that do not actually have any angel networks. They're still starting, and we're trying to help them as much as we can. By the way, the Med Angels is a Malta-based corporation, and it's not based in Egypt. No. Alex Angels, as a member coming from Egypt, they are the initial founders. And now we have 9 countries. But we're mapping all the challenges. We're trying to identify what is needed. So we find the seed funding in the most developing countries like Egypt, like Algeria, North Africa mainly, and Lebanon. This is a bigger challenge. So there's a big gap in seed funding, and that's the main purpose of creating a Mediterranean network, is to syndicate. And by syndication, one of the advantages of syndication is to provide more seed funding and fill in this area. For other countries, this might be, like France and Spain, but might not be an issue. But follow-on rounds would be higher, and follow-on rounds would require maybe syndication or access to the funds that we have also on the network.
Yes, thank you. What about Latin America and the Caribbean?
Yes, perhaps if I may start just giving a quick intro about what Scala is. Scala is an organization that was born about 4 years ago as a program supported by the Inter-American Development Bank in order to support the angel investment in Latin America. So through that, all the best practices around the world were studied, and Scala organization then decided to do these schools of teaching how to create an angel network, how to empower an angel network, what should an angel network do, how to train the angel investors, how to have investment readiness courses, how to deliver all these tools to the rest of the Latin American countries. That was done with quite successfully. And then the challenges that you start having as an organization is having that self-sustainability. Is how an organization like Scala, that originally was supported by the Inter-American Development Bank, the angel networks that belong to this organization have decided to create an independent body of how to move forward. So not only we have the challenge of the angel networks, how do they need to be sustainable and survive, but also of the organization in the whole of Latin America. So those are the challenges that we see from the top to bottom. The challenges that angel investors will have in Latin America, they're probably more paradigms that we have put ourselves into. The element of the risk is still very high for the person to take the decision on investment. The environment generally is quite safe to once you make an investment. So really it's about how to deliver the tools to those entrepreneurs to do what they have to do. You have 90% of the countries speak Spanish, so you can very easily become a cross-border startup or be an angel investor that can do cross-border. Most of the challenges that you have is really finding those entrepreneurs that need to have these scalable models. And the other challenges are traditional investors, how to convince them and to come into angel investment and not only invest on the traditional portfolio, which is that of real estate or others. Rule of law can be one issue, you know, that we or governments will find that when you make an investment, it's how can you be protected if the rule of law is not well established and well conducted. So investors find that as a huge risk in some of the countries that Scala operates. So now we have 42 angel networks in Latin America, more than 5,000 angel investors, which is something that in the last 4 years is multiplied by 5 with the numbers that it has been done. What are the challenges? Is we've got to invest quicker. We've got to be quicker investing, but also quicker scaling up our own startups, because we are ready as a region to grow these startups onto scale-ups before we actually go cross-border to other continents.
Yeah, thank you. Do you think language, there's a language barrier problem in Latin America? Do you think so or not?
A what, sorry?
Language problem.
Language?
Yes, English is a problem or not?
Well, yes. I mean, everybody speaks Spanish, but not everybody speaks English. And the problem with entrepreneurs is that they don't see themselves as they need to learn English to become international, because they're moving from one country to another. But in the world of business, we know that one of the basic things that you have to do nowadays is, be well conversant in English. You want to, because what will happen is if the entrepreneurs that we have don't become conversant in English, they cannot speak to angel investors worldwide. They cannot scale the companies worldwide. And when you listen into a pitch of somebody who is not speaking full conversant with English, you lose interest, you lose trust, and you're waiting for that pitch to finish to listen to the next one. So that is a big challenge.
Yes, but what is the risk? What is Scala doing to solve this problem? If it is a big challenge, then what are you doing?
It is a big challenge. So, it all depends where the startup is. When you have startups in the in South America, sometimes the English is not as necessary on the startup or the founder to scale up. If you have the startup in Mexico, then you're probably more than likely that you have to be conversant in English because you want to expand to the US. Yeah. That's one of the programs that we are looking at is what do we do now, apart from all the tools we give to the entrepreneurs, in order for them to have, not just to speak English. There are two different things here. One is to speak English and say, hello, my name is, and the other one is actually to pitch a project with KPIs to convince somebody to invest. So the English language in business is what all entrepreneurs in Latin America need to be fully conversant with.
Yeah. Why I'm asking this question? Because if there is no English, then there is no cross-border investment. How can you invest in a startup who doesn't speak you don't speak? So investment comes from Spanish-speaking territory if the startups are only speaking in Spanish in the region. So in order to benefit from all global investors, I think this should be in the agenda of all countries in Latin America. And let's come to a critical question. Exit. Let's highlight the importance of return of investments for angel investors. Return of investment is important because if he doesn't get back, he cannot reinvest. If we want to create a sustainable startup economy, then there should be a good exit strategy within the market. What about Europe? If I invest in a European startup, can you tell me what are the exit strategies? I don't want to go to Silicon Valley. I am bringing my money to Europe, and I want to make my exit in Europe. What are the options?
I think things in Europe have improved a lot in the past years in terms of exits. You see a lot of exits now happening. And one of the reasons why there are so many exits happening is also from the angel side. I'm talking a little bit about angel side. It's because there is so much money in the VC area that they don't know where to put the money. So they come to the angel companies to buy out the angels, and so we saw a lot of exits happening because of that situation. The dream of the IPO is still a bit a dream to the most part of the companies and the startups. So I don't think today that an entrepreneur is dreaming so much with an IPO as it was 4 or 5 years ago. There is a lot of merger and acquisition activity in Europe due to low interest rate, and this also puts some corporate with a lot of cash in the bank trying to get some innovation and acquiring the companies. So due to these two factors, lack of innovation in the corporate and low interest rate, this also brought a lot of money in Europe.
But I see that, for example, London Stock Exchange Group in London, we are still accepting UK as Europe, isn't it? I mean,
Yes,
so,
they are.
or Euronext, they all developed their own, or Istanbul Stock Exchange, private market, elite model, etc., for entrepreneurs, connecting them, angel investors, etc. These are, of course, good attempts, but still not the listing level, not at the listing level. If there is no listing, then what is the meaning of these stock exchanges are only trying to match angel? This is something that can be done through business angel networks, for example. So how can EBAN, for example, convince these stock exchanges to open their doors to list startups? Is there a hope like this in the future?
Yeah, to list more companies is not the problem of listing. Listing, I had one company listed and still listed in the Euronext, and I did the IPO. And the problem is not the listing. You have some 100,000 euros and you list the company. The problem is the liquidity of the market. So if you don't have a market maker that buys and sells your stock, if you don't have this market maker, it can happen that one day someone wants to have 100 euros to have lunch and sells your shares, and your shares drop 20% or 30%. And in another day, someone wants to buy 100 euros and your shares go 30%. So if there is not stability and no liquidity, then the market is very, very difficult. So if there is any measure, is to increase the liquidity on the stocks and to have market makers. How to do that with public intervention is a way, with incentives is with other way, from the tax benefits, for instance. But I think today there are other ways to exit, and I don't think it's such a big deal to not to have so many exits in the stock market.
Okay. What about Africa? Is there a good exit strategy in Africa? Or you are inviting the investors to Silicon Valley to make exit after investing startups in Africa?
They invited to Turkey, to Istanbul, correct? Not to Silicon Valley.
Or the liquidity problem is also in Africa? If this liquidity problem is in all continents, then we have a big problem, I think, in the world.
Well, I think for me it's more a question of the scale of it. Mm-hmm. Okay, if we look at where Africa is coming from, okay, the scale of what is happening is not comparable to anywhere else because we're so small. What we're celebrating now is the fact that for the first time in 2019, we got more than $1 billion in coming into early stage investment on the continent. Now, when you look at the breakdown of the $1 billion, you will find that there are less than 150 companies that made more than $1 million in investments. So you start to get the understanding of scale. Yes, there are exits. So, for example, we did an exit last year. We sold Striker to Moonbug. Flutterwave managed to do $35 million, which went to Silicon Valley, as you pointed out. There are, but they're very few. The one IPO we had, Jumia, has been fraught with all kinds of problems, if you look at it. So yes, they listed on the New York Stock Exchange. Yay, we have an African unicorn. And this prices just kept tumbling, and it was one problem after the other problem. So we're still at the very early stages, is what I would say. You look at ABAN. ABAN is less than 10 years old. We've just managed now to get to 48 networks in 32 countries. So we've still got a lot to go. So the concept of exits will also vary. And that's where what I wanted to leave you with is, because what we are seeing also, and this applies in a few cases I know, is rather than sell, entrepreneurs are issuing dividends themselves as a mechanism to return the shareholders' investment.
Okay, okay. What about Mediterranean region?
So yeah, that's again with the complexity of the countries. There are exits that are happening, but back to your original question as to where the angels make their money. It's two things. Either they sit and wait until there's an exit, or buy the VCs that come and take their shares from Series A. Most of the investors from the Middle East do not prefer to buy out from the angels. They want them to stay. Some of North Africa the same, maybe a little bit in Southern Europe it's different. And that's why we're trying to standardize all the term sheets that we're working on, so that we are introducing some new clauses that we have the right to sell part exit. I mean, because it makes sense. Why would I want to go out? You don't believe in this company to exit? That's the mindset of a VC, or most of the VCs. But then this is very important that we can make our money, because we took the biggest risk. The angels are the people who take more risk, and that's why it's fair enough to sell at least partially. If they want to stay, they can stay. So there are exits happening, and with the cross-border opportunities, what would make me want to invest outside of my angel network or outside of my country, unless there's an exit opportunity for that company to exit in their space, or a soft landing for the company that I'm investing in that can come and operate in my country. So it's all about markets, and it's all about exits. Without the exit strategy or a vision for the exit, it wouldn't be feasible for any angels to go in.
Okay, but as you told in your introduction part, Mediterranean region is covering some part from Asia, some part from Europe, some part from North Africa, some part from Middle East. So it is really a good convergence of different cultures, different mindsets, different. Is this an advantage or disadvantage for the region?
I would always say that diversity is an advantage, and I see always challenges as opportunities. So yes, there are a lot of challenges, but in order to overcome those, we need to think globally and think also in a strategic way that will benefit all the investors and also the startups that are operating. Because if we go back to history, you'll see the Mediterranean, it was the core place where people used to trade, and still, but it got disconnected with technology. Now we're trying to reconnect it again with all the digital transformation and how we use platforms. The world is getting smaller, but we see that there are a lot of similarities for Mediterranean countries.
Okay. What about Latin America?
Exits?
Yes.
I love talking about exits. Mainly because I think one of the issues that we have to address first is that you have that scalable, not just of the business model of the entrepreneurs, but also that you have the different scales of investing. So we were talking earlier on, and one of the speeches that you made about, you know, what about second round and third round and fourth round? And I think those are the ones that you have to worry about first. Exits will happen. What is happening in Latin America is it is a powerhouse now. It wouldn't be a powerhouse, you wouldn't have somebody like SoftBank coming in and saying, I'm going to put $5 billion and opening an office in Colombia. So you know that the macroeconomics are there for the projects to grow. So it really is, for us, it's more important to focus on the growth and professionalism of these startups to become scale-ups, and then to wait for the exits to happen automatically. How would they happen? At the different stages of the investors. Sometimes I think we are too fixated with looking for an exit completely from the project, when actually the exits that you can program are the next rounds of investment. So if I'm an angel investor, I'm going to have an exit in Latin America. It might be that I'll be an exit on a private equity, or be an exit on a VC fund that invests in B series. I don't have to wait for the whole company to sell. And I think sometimes we're too fixated on trying to sell the whole company, and you get with issues. It is difficult right now. We have 6 unicorns in Latin America, which is very good, but it also is not enough. 3 of them come from Argentina. So what happens with all the other countries? If we're going to have exits, how are we going to do it? So I think it is still a challenge for the whole region, the exits. We're more focused on actually growth for the next stages of investment, how to make sure that liquidity is there on B series, C series.
Okay. I'm an American investor, angel investor. I have 100K. And a guy is approaching me, let's say in Silicon Valley. I will put my 100K to this university student, let's say. And with the same business model, with the same business plan, almost with the same skills of the same startup, another guy is approaching me, let's say, from Frankfurt, or from Lagos, or from Cairo, or from Mexico City. Same business model, same business plan, same amount of money needed. Why am I going to put my money to a guy in Lagos or in Frankfurt, but not to a guy in Silicon Valley? What could be the reason? How can you convince this angel investor to put his money to this guy in Frankfurt or in Lagos, in Cairo, or in Mexico City? Is it important him to come to the other countries, for example, to Lagos? It is important because these angel investors will also carry their know-how, mentorship, and networking to for investors too. So it is important to attract qualified angel investor for the market if we want to develop the regional development. Yes.
I think there is a myth that all the projects that go to US are funded. This is not reality, and is as difficult as in Europe. So if you look at the statistics in the US and you look the statistics in Europe, the number of projects that are funded are not so much different. We are talking between 1 to 3% of the projects. So which shows that even if in the US you have more projects, you have harder competition. So if you are an angel in US and you have 100K to invest in Europe, probably I would say, okay, 100K stay in US. But okay, let's say if you want to just invest 100K in Europe, there are several reasons why you can invest. First, you don't know what Trump will do next, so this is one reason, and this is a huge issue. So in Europe, you have some diversification. Second, you also have diversification in terms of currency, and you don't know what's going to happen in terms of dollar. Third, if you have a company in Europe, you have access to the European market, and you can add value to this company in US. It depends what the business angel and what he does or she does, and what is the value added that the business angel can do. And in Europe, we have these co-investment schemes and a lot of incentives, so this also helps the investor to decrease the risk. So there are several situations that can make sense to an American to invest in Europe.
So governments in Europe are more maybe encouraging the ecosystem through injecting public funds to the game, rather, and this is not the case in the States. What about Africa?
Well, thank you. We still have a challenge, and I'd be lying if if I said otherwise. But here's the rub. If you are a business angel in an African city, you are better off investing in an African startup than bringing your money to Europe. Here's why. One, the numbers are there. We have the youthful population, I'll be talking about this tomorrow, and the fastest growing middle class in the world. So it's early stage, early days. That's the first reason. The second reason is actually GDP growth. Europe has tanked. You guys are doing what, 1%, 2%, if you're lucky? Africa is going gangbusters of 5 to 7% in terms of GDP growth. So that's sort of the second. However, having said all of that, the crux of it is more the African diaspora is in Europe, is in the US, and they are bringing counterpart funding now onto the continent. So there is an increasing liquidity, which makes for growth. So those would be the reasons to come to Lagos, to invest, to come to Nairobi to invest at this point in time.
Yeah, African diaspora is really a great advantage, by the way, for African entrepreneurial ecosystems.
Correct.
They want to invest very much. They are also based in Silicon Valley, let's say. They are good contacts to reach, to exit, etc.
And the emotional connection is there
Yeah.
in terms of investing in the home country.
Yeah. Okay, what about Mediterranean countries?
So for Mediterranean, our number one objective is to promote cross-border investment. So this is why we're there. We're trying to help as much as we can to promote cross-border. But then there are things...
Just a second. When you say cross-border investment, country encourages their angel investors to invest abroad or invite foreign investment to the country. Which one?
So it's both. It happens both ways. And let me tell you why. Because we have members from Saudi Arabia, from the Gulf, that are diversifying their investments. They want to invest outside. So we're giving them opportunities to co-invest with other angels that are already investing, leading the deals. But stepping a step back, looking at angel investing, it's not just about the money. It's about the mentorship. It's about the access to know-how, access to markets, because as angel individuals and networks, we're supporting the startups to grow in different markets. So yes, the money is important, but the other things are more significant. So when we're looking at, if you look at it from a return on investment point of view, absolute, then we look at the strategy for the exit. What would you mentioned 2 companies in different countries. Which one should I choose? Yes, I'd look at the one that will give me a better ROI, but I also have to consider how can I help, either as an individual or as a network, this company to grow and to achieve its exit strategy.
Okay. Israel?
Why should a qualified angel investor come to Latin America or Mexico for that fact? Just to coincide with Tommy, we also, as Africa, have a demographic bonus within our countries. So the macroeconomics as well as the cultural indicators are a very, very appetizing project for international cross-border angel investors. And we have 42 angel networks in Latin America that you can co-invest with, that have the tools of how to do it, that can help you doing it there. So why should you do it? It's basically also because as angel investors, if you're in Europe, or you're in the US, you're in Canada, your competition there is quite harsh for the good projects. Also, your equity can be more valuable in this area, in Latin America specifically. And the angel investors in Latin America are pro-cross-border. Why? Because of the constrictions we have within our countries, that having to look for liquidity, having to look for more capital, then that means we can co-invest with other countries within the region. So that's the reason why you should do it. And you should also pay attention to the startups from Europe, from the US, from Canada, that come in to raise money in Mexico, for example. At Pitch at the Beach, we had 4 projects that won And of those 4 projects, only one is from Mexico, another one is from South Korea, another one is from Ireland, and another one is from Costa Rica. That means, that they're willing to go to the Latin America to raise money and also to operate. The Irish startup is operating in Mexico and Central America. The Costa Rican startup is operating in Costa Rica, in Mexico, El Salvador, Guatemala. The South Korean startup is operating in San Francisco, and you will think, why didn't go to Silicon Valley to raise money? Because they think, I want to be where the new investors are. And the new investors are here, the new areas. And I'm not saying that all the investors, angel investors, are wrong. I'm just saying maybe we are a little bit more risk, like we like to have risks. Maybe we want to have a new disruptive way of doing things and act quicker and say no quicker and have different financial models, but also come from regions where you, as a startup, could operate there as well. So this cross-border, if you were to invest $500,000, Babers, then I'll be saying, come to Mexico with me, and you'll see the quality of the startups are all the angel investors.
Yeah. Dear panelists, thank you very much for joining this roundtable. Just let's give one answer to my question immediately. Only one answer. Invest in Europe. Why?
It's one of the largest economies in the world, and you have a lot of incentives, and you have the best angels in the world.
Invest in Africa. Why?
Africa is the future. 90% of the growth of the world in the future will come from Africa. Invest in the future is Africa.
Invest in Mediterranean countries. Why?
Connecting Africa, Middle East, and Europe together.
Invest in Latin America. Why?
Invest in Latin America because Latin Americans want a better world. You'll have a better investment, and we're more humanly connected. And we love to have fun.
Hola. Thank you very much for these great speakers. And I'm sure you are going to enjoy the next session too. Please don't leave. And thank you very much, dear panelists. Thanks so much.
All right, and thank you very much to our moderator, Barbara Zaltuntas. Well done. Hey. Thank you. That could be.